What's going on, guys, and welcome back to another video. So today I want to discuss 3 stocks that I currently hold that I will be buying a lot more of in the coming weeks. As the markets are closed this Monday due to Martin Luther King Day, it gives you definitely a long weekend and time to reflect on your overall investments, especially if you invest into the US stock market. Over the past few days, I've kind of focused more on my ARK combined ETF, which is currently in the process of rebalancing. So at the moment, there's currently 0 holdings. We're up 13.5% after less than 2 weeks investing. So that's very impressive in my opinion, especially because it's an ETF. So once that invests this week again, once the holiday is over, and once we go into Tuesday's market, it'll be interesting to see if these ARK combined ETFs can keep up the same amount of growth. But we have put the normal 30 company blue chip portfolio on the back burner for the past week or so. So it's about time that we look through it today and see what companies we can take advantage of in terms of dollar cost averaging. At the moment, this 30 company diversified blue chip portfolio is currently valued at €5,034, and we're up €585 in this portfolio, or 13.1%. We can see here throughout this portfolio, we have every sector from tech to consumer discretionary, real estate to, let's say, consumer staples, tech. We have some ETFs, healthcare. We have the financial sector. We have many other sectors, including energy and clean energy and all of the above. So we are very well diversified across all sectors. And in today's video, I want to look at 3 companies in particular that are currently in the red on my portfolio that I feel I can take advantage of in the coming weeks by putting more money into the stocks, effectively improving my dollar cost average. The first of the stocks that I want to discuss today is Facebook. We currently have €219 invested, and is after going into the red. It was up about 8 to 10% a few weeks back, but it's down 2.7% at the moment, or €6. Again, I've said many times before that companies like Facebook and the other 2 companies that I'm going to mention in today's video are companies that I'll always buy more of anytime it goes into the red. So for me, this is like buying a company on sale. So I'll be definitely lumping in a lot more capital into this stock. We can see the reason for this fall in stock price was because Facebook stock fell in price on Thursday and it underperformed the market. So that was one of the main reasons. Shares of Facebook slid by 2.38% on Thursday to $245.64, and were proved to be an all-around poor trading session for the stock market, with the Nasdaq especially underperforming. We can also see here that the stock demonstrated a mixed performance when compared to some of its other competitors, such as Microsoft, Alphabet Class A, Twitter, etc. Anytime that I've stated in many times across numerous videos that one of these blue chip tech companies go into the red that I hold, I'll always buy more and more of, as the fundamentals haven't changed at all. It's just a cyclical market, as you're well aware, and all different sectors are affected at different times. So anytime, again, Facebook is down over 2% at the moment in my portfolio. So if we go back into trading 212, it is currently down 2.73%. So I'll probably be putting another 100 or 200 euro here, effectively doubling my position. I read a very good article on the Motley Fool about why Jeremy Bowman is still very bullish on Facebook, and he made some very valid points here as well, despite the downtrend in the stock, albeit only 2.5 or 3%. And he made 3 good points, and in synopsis, he believes that advertising will recover, especially after the COVID experience and once things go back to normal. The regulatory threat is priced into the stock already, so as you know, Facebook has had many problems in terms of regulations over the past few years, but this is already priced into the stock, so there's nothing new there. And he also believes that it's a bulletproof stock, as the year 2020 ended with a bang on the stock market, and 2021 has gotten off to a brisk start as well. Coca-Cola is the second company that I'll be buying a lot more of, and surprisingly, this is one of the first times since I started investing where it has gone into the red, so that comes as a welcome opportunity as a long-term investor, and that's one of the main reasons why I only had €78 invested into this stock, again because the second I bought it, it nearly went up in value straight away and continued to do so, up about 5-10%. So as it's now down 2.4%, I'm going to start lumping in a lot more capital in here, maybe another 150 to 200 euro, even doubling or tripling my current value of this stock. Again, anytime companies such as Coca-Cola, another well-known blue chip diversified company, goes into the red, it definitely signals buy alerts for me. Articles such as the one on screen at the moment on Forbes kind of reinforces or reinstates what my own belief is in terms of stocks like Coca-Cola that dropped 7% this week, and that patience will be the prevailing factor here in terms of investing long term, and I believe this is a great opportunity for people to buy this company on the dip. The main reason for this dip, again, like the majority of companies lately, would be because of the pandemic. We can see on Forbes that Coca-Cola stock, ticker symbol KO, decreased almost 7% in the last week, currently trading at about $51 a share, and this drop was driven by the COVID positive cases in a new strain leading to lockdowns in the UK, which led to expectations to the impact of the pandemic lasting longer than earlier expected. Another little interesting point here would be that the possibility that the virus would affect Coca-Cola sales, which is largely dependent on away from home consumptions like bars, movie theatres, sports, etc. Extended lockdowns or new ones will take a toll on the company's sales, which will effectively lead to analysts downgrading Coca-Cola stock estimates over the next few days. And again, if you're a long-term investor, you need to realize that there will always be dips like this, which should definitely possess opportunities to buy more, as once all of this the pandemic passes, eventually all of these prices will go back to normal and even increase, effectively giving you a larger sum of profit. The third company is another well-known stock, and if you scroll down here, we can see that that company will be McDonald's, which is currently down 1.39%, which I find quite surprising considering that it has been upgraded by a lot of investors over the last week or so. For example, here we can see that analysts have upgraded McDonald's for the first time in 9 years. McDonald's stock is on the rise following an upgrade from Oppenheimer, which believes that the shares are worth buying for the first time since 2012. Analyst Brian Bittner upgraded McDonald's ticker symbol MCD to outperform from perform to set a target of $240 for the stock price. The move, he says, comes as the stock has underperformed despite factors that would bring gains. So as I said already 2 seconds ago, I was surprised to see that McDonald's, although it's doing quite well at the moment, was after going down in value. Just like Coca-Cola and Facebook, McDonald's is another one of my favourite companies to invest in. And in my own opinion, a lot of people for that matter, think that McDonald's is just kind of a fast food franchise, but effectively as well, it is a real estate empire, as it has extreme amounts of property and land dotted across the world. So it's not just the standard takeaway or fast food outlet that a lot of people believe McDonald's to be. They have a lot more going on, and they have extreme diversification, in my opinion, as they're not just a fast food outlet. So there you have it. Even though I've been focusing more on my ARK combined ETF the last week or so, I still have to draw my attention back to my main 30 company diversified portfolio, and the 3 companies again that I'll be investing a lot more in over the coming week or so will be Coca-Cola, McDonald's, and also Facebook are the 3 companies that I'm going to put more capital into in this stock portfolio over the coming week. If you found this video anyway helpful or entertaining, it would be brilliant if you consider liking the video, and again as always, if you're new around here, it'd be brilliant if you consider subscribing to the channel, as we're currently on 593 subscribers at the moment, so it'd be really helpful if you could do that as well. And finally, and more importantly, if you have any questions or queries or suggestions for that matter, please comment below and I'll be sure to get back to you as quick as possible. Thanks very much guys, have a good rest of the weekend, and I will talk to you in the next video.